As fee-only financial planners, we at Ivy League Financial Advisors, LLC are fiduciaries on behalf of our clients. We also hold the Accredited Investment Fiduciary Designation. But what exactly does being a fiduciary mean? The term fiduciary has a confusing and complex origin and is derived from many different sources. A common definition of a fiduciary is someone with a legal and ethical responsibility to carefully manage someone else's money or property. The sources that have helped us to define what this word means are: number 1, the prudent man rule. This is based on common law stemming from the 1800s and laid the groundwork for trustees to act with due diligence for their beneficiaries. Number 2, the Investment Advisors Act of 1940. This formed the basis for regulating registered investment advisors. Number 3, the Employee Retirement Income and Security Act of 1974, commonly known as ERISA. This established minimum standards for regulating pension plans and establishing conduct for the sponsors of those plans. And number 4, the Uniform Prudent Investor Act of 1992. This allowed investment managers to utilize modern portfolio management theory in their investment decisions. One would think that with these and other sources, the exact definition of the term fiduciary, and more importantly, the best practices a fiduciary should follow, would be clearly laid out. But no single source provided guidance on how to implement a fiduciary standard. The Center for Fiduciary Studies, now known as FI 360, was formed in 1999 as a training organization dedicated to instructing those entrusted with making investment decisions on behalf of others as to how to better understand their fiduciary responsibilities. It took years for them to look at the varying sources and come up with a definition, as well as best practices that fiduciaries should follow. These best practices are taught in the Accredited Investment Fiduciary, or AIF Designation, which is widely recognized as a gold standard for understanding the responsibilities of fiduciaries. The AIF designation signifies that the holder has a thorough knowledge of the fiduciary standard of care. Through FI 360's AIF training program, AIF designees learn the best practices and the legal framework they are built upon. They also have a reputation in the industry for the ability to implement a prudent process into their own investment practices. Ivy League has adopted the 4 best practices outlined by the AIF designation, customizing them for our clients. Number 1, organize. Identify and document responsibilities of all involved parties, resulting in Ivy League's proprietary investment advisory agreement. Number 2, formalize. Identify the appropriate risk level and expected returns for each client and draft a strategic plan to manage their portfolio, known as our investment policy statement. Number 3, implement. Execute the investment policy statement using a formalized due diligence process to identify the proper investments for each client. And number 4, monitor. Review and adjust the investment policy statement periodically to make sure that the client's goals are continuously addressed. Chris Brown, president and founder of Ivy League Financial Advisors, LLC, has been a proud AIF designee since 2005 and has worked to implement the best practices of the AIF designation, as well as their code of ethics, into the investment process at Ivy League. He also is continually taking advantage of FI 360's training and educational opportunities to stay abreast of industry updates and current events. To learn more about the AIF designation and how Ivy League is committed to the fiduciary standard in our investment practice, please visit our website at www.ivyfa.com/AIF.